Think about the last time you bought a loaf of bread, filled up your car, or paid your rent. You saw the price, you tapped your card, and you moved on. You probably thought you only paid the price listed on the tag, but you were wrong. Tucked away inside that transaction, and every single transaction you will ever make, is a ghost. A silent, invisible partner that takes a cut of your hard-earned money before you even get a chance to save it. It's a tax, but you will never find it on a government bill, it won't show up on your salary slip, and no accountant can help you deduct it. Yet it is currently eroding your wealth faster than any income tax ever could. This isn't about inflation, not in the way you've been taught to think about it. We are told prices go up because supply chains break, or because wars break out, or because corporations get greedy. Those are symptoms, not the disease. The real mechanism is...
This is where the hidden tax comes alive. It is a slow, compounding transfer of wealth. Imagine you have $10,000 sitting in a savings account. You earned it through long hours of labor. But while that money sits there, the central banking system expands the total money supply by 10% in a single year. Your $10,000 didn't disappear. The number on the screen remains exactly the same. But its share of the total economic pie has just been diluted. You didn't lose money. Your money lost its meaning. It is a legal form of counterfeiting, conducted by the very institutions trusted to protect the economy. The cruelty of this system lies in who bears the burden. When new money is printed or created via debt, it doesn't distribute evenly across the population like rainfall. It enters at the very top. It goes to the megacorporations, the commercial banks, and the ultra-wealthy individuals who have immediate...
If you zoom out to look at the broader landscape, the long-term risks of this mechanism become terrifyingly clear. When a population realizes that their labor cannot outrun the degradation of their currency, the social fabric begins to fray. The middle class, which relies on steady wages and predictable costs, gets systematically hollowed out. Wealth concentrates into fewer and fewer hands, not necessarily because those hands are more productive, but because they own the hard assets that absorb the inflation, while the working class owns the currency that dilutes. It turns the entire economy into a high-stakes game of musical chairs, where the music is controlled by a select few and the chairs are disappearing one by one. This leaves us with a reality that is difficult to face, yet impossible to ignore. Every hour you spend working is an investment of your limited time on this earth. When the system steadily dilutes the reward of that time, it isn't just taking your currency, it is taking a fraction of the life you spent earning it. Which leads to a final, heavy question. If the money you earn is designed to lose its value, and the assets that hold value are intentionally priced out of your reach, are you truly working for your own future? Or are you simply running on a treadmill designed to keep the engine of global debt spinning?